Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about GATES Industrial Corp PLC quarterly report. GATES Industrial Corporation PLC provides a wide range of businesses and services through two main segments, power transmission and fluid power. The company's offerings include engineered power transmission solutions, fluid power solutions for various industrial applications, metal drive components, kits for automotive replacement, channels hydraulics, including hoses, tubing, coupling, and fittings assemblies. These products cater to diverse markets such as construction, agriculture, heavy-duty trucks and buses, energy and resources, automotive, personal mobility, automated manufacturing, and logistics systems. GATES Industrial Corp PLC's stock price has increased by over 13.11% in the past year due to several key developments. The company reported strong third quarter 2025 earnings, exceeding analyst expectations with adjusted earnings of 39 cents per share. Net sales also rose by 3%, and net income attributable to shareholders reached $81.6 million. Additionally, GATES Industrial announced a new $300 million share repurchase authorization, which can positively impact earnings per share. The company raised its adjusted EPS guidance for 2025, expressing optimism about its midterm business prospects driven by growth in key verticals such as personal mobility and data centers. These positive financial developments have contributed to the increase in GATES Industrial's stock price. The primary drivers of revenue growth or decline can be identified through an analysis of the financial summary provided. Revenue growth is primarily driven by the power transmission segment's pricing benefits and increase in volume, as well as favorable impacts from average currency exchange rates. Additionally, the fluid power segment has experienced significant revenue growth in East Asia and India and Greater China. In contrast, revenue decline can be attributed to the fluid power segment's volume decline, higher SG and expenses in the power transmission segment, and lower volumes in the same segment. The mixed results indicate that while net sales and gross profit have shown an increase for certain periods, they have also declined in other periods. Overall, the performance of these segments has been a key driver of revenue growth or decline. Net income and profit margins. A shift in performance. The financial performance of a company has undergone significant changes between Q3 2024 and Q3 2025. Net income has increased by 60% to $88.7 million, with the 9-month total rising to $220 million. However, this growth is not reflected in profit margins. Gross profit margin and operating income as a percentage of net sales have decreased, indicating a decline in profitability. The adjusted EBITDA margin has also seen a substantial drop, from 330% to 221% for the 3-month period. This trend continues into the 9-month period, with an adjusted EBITDA margin decrease from 325% to 264%. The reasons behind these changes are not explicitly stated, but it is clear that the company's financial performance has shifted in recent quarters. While net income has increased, profit margins have declined, suggesting a need for operational adjustments to maintain profitability. The company is indeed generating positive operating cash flow, as evident from various financial summaries and reports. The net cash provided by operating activities has increased to $208.3 million in 2025 compared to $188.7 million in 2024. Additionally, the operating cash inflows for the period ending September 27, 2025, were substantial at $146.5 million, with no significant outflows mentioned. Furthermore, the company's operating cash flow status is reported as positive on page 53 of the financial report. This indicates a strong and stable financial position for the company, allowing it to generate sufficient cash from its core operations. The company's debt level and interest expenses have undergone significant changes over the past year. Interest expenses have decreased by $28.4 million for the 9 months, from $121.7 million to $93.3 million. This decrease is a notable improvement, with interest expense as a percentage of net sales decreasing from 4.7% to 3.6%. However, debt levels are more complex, with some sections indicating a decrease and others showing an increase. The total carrying value of debt decreased by $115.8 million, while long-term debt saw a net change of dollar amount. Overall, the company's financial situation has improved in terms of interest expenses, but the picture is less clear regarding debt levels. The company's financial performance varied across segments and regions in the period ending September 27, 2025. Notably, power transmission was a standout performer, with revenue increases of $20 million in 3 months and $22.5 million in 9 months. Fluid power, on the other hand, saw declines of $5.1 million in 3 months and $14.3 million in 9 months. In terms of regions, Luxembourg and the U.S. were strong performers, with revenue growths of $40.7 million and $149.4 million, respectively, in 3 months. In contrast, several regions struggled, including the United Kingdom, no data available, EMEA, excluding the UK and Luxembourg, which saw a decline of $14.7 million in 3 months, East Asia and India, which underperformed compared to Greater China, South America with relatively low revenue, and North America, excluding the US, also with lower-than-expected revenue. Management is optimistic about the company's future growth, particularly in personal mobility end markets. To drive this growth, they will focus on executing their strategy to improve profitability and enhance shareholder value through investments in product development. However, they also anticipate one-time costs in 2026 for restructuring and system implementation, which may impact short-term performance. The company has made several key financial transactions in the given period. In terms of acquisitions, there is a mention of acquiring businesses, but no specific details are provided. On the other hand, the company has undergone divestitures, resulting in losses on disposal of discontinued operations. The losses were $0.1 million for 3 months and $0.7 million for 9 months in 2025, and $0.1 million for 3 months and $0.5 million for 9 months in 2024. The company has demonstrated its commitment to returning value to shareholders through 2 key initiatives: dividend payments and share buybacks. In terms of dividends, the company has paid out significant amounts to non-controlling interests, totaling -$1.7 million in 2024 and -$6.5 million in 2025. This indicates a clear intention to distribute profits to stakeholders. Furthermore, the company has also engaged in share buyback activities, repurchasing shares worth -$176.1 million in 2024 and -$13 million in 2025. Additionally, in March 2025, the company purchased 672,911 shares at a total cost of $12.9 million. Overall, these actions demonstrate the company's focus on creating value for its shareholders through both dividend payments and strategic share repurchases. Concerns over inventory buildup, a growing issue. Our financial summary reveals a pressing concern regarding inventory buildup. Multiple references throughout the report highlight this issue, with explicit mentions on pages 27 and 60 confirming the presence of inventory buildup. Furthermore, the data on page 61 indicates lower write-offs and adjustments for the current period compared to the previous year, suggesting that inventory levels may be increasing. This trend raises concerns about potential inefficiencies in our supply chain management. While there are no significant worries about supply chain disruption, it is essential to address the growing inventory buildup issue to prevent future problems. That concludes the financial summary for GATES Industrial Corp PLC. Feel free to comment below, and I will be happy to answer them when possible.